Our witness is in person. Welcome, Mr. Chopra. The committee is in hybrid format. Some members might do this remotely. Let me start by talking about two of our colleagues who are retiring at the end of this Congress. Senator Toomey sat by my side, I by his side, for 87 of the 89 hearings this committee held this Congress. We each missed one. I think I was sick one day. He had a family issue. I mention that because it shows how seriously he takes this job, both as a senator and a ranking member, and I will always, always remember that and be grateful. I'm sure there were many hearings that he didn't want to sit through, but he did, and I give him credit for that. I've enjoyed getting to know him as we sat together and got to know each other better for the literally hundreds of hours over the last 2 years. We moved dozens of nominees through the committee. We worked together on crucial national security issues like China. Most recently, we've worked together on FTX, and off the committee worked on important maternal health issues. While we have our disagreements, there may be no other Republican as passionate as Senator Toomey, and it's backed by his strong worldview and intellect, especially on financial matters. He was a critical voice in our committee's response to COVID and the congressional oversight afterwards. The quality of debate and discourse in this committee was improved because Pat and his incisive intellect, I use that word again, were engaged. I also want to commend Pat's staff, Brad Grants, Dan Sullivan, John Cruz. Thank them, the rest of the team, for their hard work and diligence. I wish Chris and Pat and their 3 children the best in the next phase of Pat's career. I have not known a banking and housing committee without Senator Shelby. I came to the committee in 2007 in the middle of financial crisis. He was then, and Senator Shelby points out that his first day on the committee, Senator Proxmire of Wisconsin, who was the predecessor to Senator Cole, was chairing this committee. He's helped shape the agenda for 35 years during Enron, during Sarbanes-Oxley, the Great Recession of 2008, Dodd-Frank, the COVID pandemic, so many other critical moments in the history of this committee. He served in leadership roles as either chair or ranking member for more than a decade, working with senators as chair or ranking with Senators Sarbanes and Dodd and Johnson, and then finally me in his last 2 years as the leader of this committee. No one on the Republican side who is a greater proponent of strong capital at banks, something I always admired about Senator Shelby's philosophy and work. I wish you and Annette well in your retirement. Thank you. Welcome back, Director Chopra. The Banking, Housing, and Urban Affairs Committee used to be referred to simply as the Senate Banking Committee because it was mostly all about Wall Street. When Democrats took control 20 months ago, we changed that. So it's fitting that this committee's last hearing for the 117th Congress is CFPB's semi-annual report, because fighting for consumers is one of the most important things we do in this committee. Since CFPB first opened its doors 12 years ago, the consumer agency has returned about $15 billion with a B, $15,000 million to consumers, including principal reductions, canceled debt, and other relief. $14.9 billion. Over 183 million consumers have been eligible for relief. The CFPB has a track record of helping real people get real compensation for real harm from financial institutions that wronged them. 2012, just over a year after being fully operational, CFPB ordered American Express subsidiaries to refund $85 million to an estimated 250,000 customers for illegal credit card practices, including charging unlawful late fees. In 2014, CFPB reached a settlement requiring Sallie Mae to pay $60 million to an estimated 60,000 service members serving our country for overcharging them on student loans. In 2016, the CFPB fined Wells Fargo $100 million for opening unauthorized accounts and ordered West Wells to refund an estimated $2.5 million in fees accrued. This year, CFPB fined Bank of America $10 million for unlawfully garnishing consumer accounts. When financial institutions illegally took consumers' hard-earned money through unlawful late fees, through too high interest rates, through unauthorized fees, through improper garnishment, CFPB cracked down and ensured that consumers keep their hard-earned money. No other agency fights for consumers like CFPB. It's no wonder Wall Street hates this agency. Since the passage of Dodd-Frank, Wall Street and its allies have aimed their fire at CFPB, trying over and over again to undermine and gut the agency responsible for fighting for Main Street and consumers. Republicans have proposed bill after bill to weaken CFPB, to take away the effective single director structure, to put the agency's funding in the limbo of congressional appropriations, or to simply undo the CFPB. But Congress created it, specifically designed its funding structure to make the agency an effective consumer watchdog. According to the committee's report on Dodd-Frank, quote, the assurance of adequate funding, independent, my emphasis of the congressional appropriations process is absolutely essential to the independent, again, that word, independent operations of any financial regulator, which is why other financial regulators, Federal Reserve, OCC, FDIC, NCUA, are independently funded and not subject to congressional appropriations. And when Wall Street and Republicans in Congress, always allies on these kinds of things, tried to put the CFPB out of business, the public loudly and clearly said no. So even in a unified, all-Republican President, House, Senate, they couldn't put it out of business. It's remained intact because it does its job helping consumers. Consumers know Wall Street doesn't have their interest at heart. Consumers know Wall Street needs a strong regulator. Consumers remember the damage that Wall Street wrought on the economy, on their neighborhoods, on their wallets. I live in Cleveland, Ohio. My zip code had the highest number of foreclosures in 2007 of any zip code in America. I know where that damage comes from. Consumers know that CFPB follows the facts. They go after bad actors, from banks overcharging customers to predatory payday lenders trapping consumers in debt. The CFPB stands up to Wall Street. Director Chopra and the CFPB use all their power to fight discrimination. They continue to go after financial institutions for their treatment of Black and brown consumers. 2021, CFPB required a bank to pay $5 million to address redlining that harmed Black consumers. This year, the agency announced it will re-examine whether discrimination violates Dodd-Frank prohibition against unfair, deceptive, and abusive acts and practices. And in July, in response to a local lender's failure to serve Philadelphia's majority minority neighborhoods, CFPB, along with DOJ's Combating Redlining Initiative, brought $18 million in funds to support homeownership in those neighborhoods. In total, gotten $637 million from discriminating financial institutions, tens of millions of which have gone directly to minority consumers who experience that discrimination. There's a reason why the civil rights community was instrumental in the creation of Director Chopra's agency. They knew they needed an agency that was empowered and unafraid to fight against discrimination. It's creating a fair, transparent, and competitive economy. Major and consequential CFPB rules, like the ability to repay rule, not only provides protections for consumers buying homes, but also creates rules for financial institutions and the broader economy. That's why we created the CFPB, to ensure that the financial marketplace is fair for everyone, that corporations can't rig the system and get away with it. That is the essence of capitalism.